Dave, it's a big year for elections across the world, and also there's one here in the UK.
The polls seem to be narrowing, though. Turmoil with Labour. Maybe it's not going to be as massive a landslide for Labour as we were thinking.
And that has all sorts of implications. Now, the City of London is also trying to figure out now what they've gained from 14 years of Conservative leadership.
And what might happen if we do indeed get a change of administration in the coming months.
Welcome to In the City, Bloomberg's podcast connecting you to the conversations and the stories shaping the world of finance.
I'm David Merritt.
And I'm Francine Lacqua.
And this week we have with us Miles Celic, the Chief Executive Officer at TheCityUK. That's the trade body which represents financial and professional services here in the UK.
Miles, thank you for joining us.
Thanks very much for inviting me.
I mean, this is a big year for UK business as they try and figure out what a possible Labour government means for them. How have the Tories done so far?
The Tories clearly are struggling in the polls. We had a dinner with some Conservative candidates last night. I think they were determined. They felt.
What's the mood? Determined.
Well, they were determined. They felt the mood in their patch was, was not reflective of where the polls were. But in
denial, or.
Well, I mean, it was certainly not for me to just to determine whether or not they're in denial or not. But there was a sense of, look, they've got a tough mountain to climb. But they are clearly in Westminster and Whitehall and in the constituencies, they are moving towards election mode. They're moving towards knocking on doors. From our point of view in industry, really whoever wins the next general election, from the point of view of financial and professional services, there's a lot of continuity about. That was one of the big things that Labour pushed at their recent business conference. There's a lot of consistency in policy, and certainly what we're hearing from international investors. I was in Hong Kong and Shanghai a couple of weeks ago is actually it seems to be pretty much business as usual from the point of view of sort of macro policy in this kind of space.
So, I mean, all the wobbles this week with Labour, polls narrowed quite a bit. I do wonder a little bit at how much of this really breaks through. Does it become a little bit more uncertain? I
don't know. As I say, at this dinner with the Tory PPCs, the start of it was all, it's all right on my patch. That doesn't fit with the polls. By the end of it was a slightly different equation. I think quite a few of them are expecting a bit of a battering.
It feels like if we get the landslide scenario is, well, that's okay, we flip to Labour, but at least it's secure and stable. But there's another outcome potentially, which is it's a bit closer and we have a hung parliament.
This is the thing that worries industry and investors, which is that if you end up with a narrow Labour majority or no majority at all, or no, the Tories
and the SNP and maybe kingmakers,
you're back to the political risk and the political instability. So if there is going to be a decision, I think certainly the members we speak to would rather that it was a decisive result. So you end up with Labour with 50, 60 or more in a majority, or if it's the Tories with 50 or 60 more, but that doesn't look likely. So it's much, much better to have consistency, clarity and a direction of travel. And as I say, genuinely, most of the people we speak to don't see that much of a difference. In the big picture stuff, carry will be there to a certain degree. We'll see how that happens. The non-dom things will be there to a certain degree. We'll see how that plays through. But
Private school fees.
Do you know what? Private school fees get so much cut through. So genuinely, I was talking to this businessman in Hong Kong who sent his kids to UK private schools and then UK universities. And he said, you guys are getting complacent because this is substantially increasing the cost. So it would have made me think twice, he said, about sending the kids to a private school. So no, I think that one's going to get more difficult.
And it's the one policy that Rachel Reeves, they're sticking. I mean, they talk about it all be obviously it has political cut through.
Yes.
Domestically and fiscally, it's not going to make a huge amount of difference.
Yeah, I can't see that it makes a huge amount of money. I suspect you end up with a bunch of people dropping their kids out of the private schools, the ones who are sort of on the edge of affordability. But it doesn't raise a life-changing amount of money from a government's perspective. But I think it does have a potential impact, just from the conversations we've had, at least with some people in terms of how they look at the UK. And I think that sort of sense of the political driver on that being, it's one of those things that plays well to the Labour base, but also plays well to the sense that people at the upper end of the income scale have done very well over recent years. And if there are going to be tax changes over the coming years, I suspect the polling would show that their support that lands on those with the broadest shoulders.
I guess the question is, we don't really have the policies, right, in terms of corporate taxation from labor yet. We don't really know what they do with carried interest. So at the moment, there's been a big push, and we've seen that through all of our reporting, Dave, that their labor wants to woo business without giving too much details.
Yeah, it's a bit thin, isn't it, Miles?
I thought the business conference was interesting. So I think the big headline from that was Rachel Reeves's commitment on corporation tax. So she said headline rate will remain at 25%, and they're going to go for the stability piece. One of the things we've been saying to government and to the opposition for a while is actually when George Osborne was Chancellor, he had this commitment that the UK would always be in the bottom quartile of the G8 on corporation tax. And that just helped with tax planning. You kind of knew which direction things were going in. It just made life a little bit easier in terms of anticipation. But the reality is you've got debt at high levels, although I think sometimes the UK story is slightly overdone. I think we are the second lowest debt to GDP ratio in the G7, but it's clearly pretty high by historical standards. There's whoever wins the next general election, there's going to be a demand to invest in infrastructure, in public services, so health, in schools. There's the need to rearm, which seems to be a cross-party basis. And this isn't just something that we're seeing in the UK. This is across the West. So what gives? There's not much room really to increase debt. They seem to have closed off increases in taxation. So our sense is there'll be a dash for growth. And that certainly seems to be the approach that Labour's taking. I suspect that will be what the Tories will have to go for as well. And that brings industries like ours into play. So what can you do in terms of unlocking the investment that potentially sits in the private sector on things like green finance and the shift to net zero, but also potentially on driving things such as reinvestment in infrastructure and elsewhere.
So there's not much space, is there? I mean, you talked about the going for growth. We can't slash taxes and ramp up spending in those ways. So there's not much in it, is there?
Yeah, I mean, one thing I'd say is, and full credit to the Prime Minister and the Chancellor, I think they have, to a certain degree, to a very large degree, sort of reclaimed the UK's reputation for stability. And, one of the things the UK's sort of historically had is this sort of sense of, we're a bit boring and predictable and you'll get a slightly better return. Yeah, slightly better return here than you might elsewhere. But
and
boring
what did they call it? The moron premium?
That was it. Yeah, the FT, I think, called it the
And when you talk to
premium.
people in Singapore, I mean, do you think the moron premium is gone?
I think there is definitely a sense that the UK is back into a more stable, more predictable place. And I think it's not just what happened over that summer, that sort of quasi-Kwarteng Liz Truss summer. There is no getting away from the fact that Brexit created a space where the UK was seen as politically, much too exciting and unpredictable. You then had the 2017 general election, which brought the possibility of a Corbyn government into play. You could even go further back and say you look at 2014 and the Scottish independence referendum. The UK has been historically unusually politically interesting. We did a dinner with some Italian counterparts a couple of years ago. And at the end of the dinner, one of the Italians stood up and he said, I'd like to propose a toast of thanks to our British friends for swapping their politics with ours.
Right.
And it was
The Economist did that cover, the upset. Italians,
all Italians.
Brittany, I think they had on the front, right? And I think everyone was outraged.
I'm sorry you don't have, as good as pasta as the Italians have, or the weather, frankly.
Outraged.
But I guess the question is, when you look at the numbers, if you look at what happened to servicing debt pre-COVID, and then because of inflation, I think debt servicing costs are about £50 billion higher than pre-pandemic days. So to your point, I don't see how any party can actually cut taxes unless you go into, austerity again.
Yeah, I think it's very difficult to see where tax cuts come from. And certainly I don't think that growth can only be driven by tax cuts in any case. I think what's interesting is actually if you look at the United States, where you've had the CHIPS Act and you've had the Inflation Reduction Act, and the US is going gangbusters in terms of economic growth at the moment. And that is a very active utilisation of the state. And it was the same in many ways, actually, ironically enough, under Trump. Very similar approach under trade.
We can't do that here, can we? And we've just seen this with Labour having to row back their green spending because the sums don't add up here. We can't, we're not the United States. We can't splurge the cash.
We can't, although whenever we raise this with government makes the point that if you look at the overall level of subsidies and support across the piece on green, then actually it's a comparable amount of GDP. Now, that's fine, but it's a GDP of 2.8 trillion versus a GDP of nearly 10 times that. So the impact is different. That's also had an impact on capital markets. It's sort of dragged a huge amount of investment into the US and a huge amount of business into the US. But I think there is this point about the role of the state as we move forward. We were talking to one of the people advising Labour a little while ago, and he said we're moving towards something that he termed the fourth way. So we've kind of had Tony Blair's third way, and I don't think this is a sort of, trademarked Keir Starmer moment. The way he put it was that this is the fourth way, which is an active interventionist state working in partnership with dynamic free markets.
But they've just dialed it back. I mean, were you disappointed to see that ambition scaled back on
the
Labour plan?
I think that was a very sensible approach. It's
the boring approach.
It was the boring approach.
Yeah.
Rachel Reeves turned around and said, we made this commitment under a different set of circumstances. To your point, Francine, the debt servicing levels were very different. We're therefore having to look at what we do in terms of how we move forward. I don't think that there is a reduction in the commitment to net zero from that. I think it's just they're looking at how they do that in different ways.
Make the sums work.
But I think it also therefore points to what do you do in terms of blended finance. I was at COP28 in November, as I'm sure you guys were. One of the big things that came out of that discussion was how do you harness the private sector in service of driving green and sustainable finance, the move to net zero, adaptation, etc.
But isn't there a bigger concern here of what the City of London becomes? So, at your annual dinner, the Chancellor was saying, well, the UK and actually the City of London needs to become the next NASDAQ. We're going to focus on technology. I mean, he may not be Chancellor for much longer. I don't know whether technology and green bond is going to be the thing that Labour want to harness.
So look, that's absolutely where I think we're heading towards. It is this sort of sense of a high-tech economy based on high amounts of innovation. That'll require, in our view, a different approach on regulation. So the regulatory approach historically on tech, on data has been...
And migration?
And potentially on migration. We've got to be able to attract the best in the world here. And we've also got to be able to recruit from the best in the UK as well. So it's not just about bringing people in, it is about, to use the term, growing our own timber.
Can we really compete though here? I mean, it's good to hear the Chancellor talk about the focus on tech. We've been looking at the results we've been seeing from the tech front, the massive numbers coming out of the United States. And the one that really struck me was looking at ARM, which doubled in price. Yeah. Now, this is a British company, British founded, and chose to list in America. And it's reaping the rewards now. The share price, I think it's now worth something like 150 or so billion. It's one of the biggest capped companies now in Britain.
It's like
but it chose to go and list in America. It made that decision. I mean, how can we capture the talent that's here, capture the potential and stop it flowing over the Atlantic?
So I'm a little more positive actually on that. So firstly, if you look at fintech, there are three major fintech industries globally. It's the US, it's China, it's the UK. It's the same with AI. US, China, UK. And if you look at the lead the UK's got in Europe, it's often way ahead. Most years in terms of investment, it's way ahead of France, Germany, Italy.
France would push back against that.
The French would, and you can point to certain surveys about the number of
listed companies or technology
and also
funds.
the number of investments they've had. But the amount, the actual quantum, the UK continues to be ahead. And I think the UK is still a much more attractive place. It has the advantage of the universities. So we are the second biggest number of top 100 universities anywhere in the world, which for a country of fewer than 70 million people is still pretty impressive. You can look at the number of people who are coming in as foreign students. The UK continues to be a really attractive place to come as a foreign student, second only to the US and arguably in some ways ahead. So I think the talent piece is absolutely critical. You've raised a really important point on valuation. I think ARM is a fantastic success story. I mean, full credit to the guys there. But actually, if you look at UK companies that operate predominantly in the UK who list in the US, typically 18 to 24 months after initial listing, their valuation is below that of their American counterparts. So it's a more complex story than I think is sometimes pointed to.
Miles, what does the City of London Financial Services actually want from Labour right now? Is there a danger that if, a Chancellor and then a Prime Minister that understood hedge funds, that understood Wall Street, couldn't get it right, that whoever comes next, has even less of a chance?
So I'd say the first thing we've got, which was continuity on the Financial Services and Markets Act and the Edinburgh reforms and the Mansion House reforms. And every time, we at TheCityUK or our members see Rachel Reeves or Tulip Sadiq or Darren Jones, they are at pains to stress, and their financial services report that came out a couple of weeks ago said the same thing. This is about continuity on the Financial Services and Markets Act. On a more specific basis.
For 5 years, right? That's what they pledged.
So I think that it was more that they will continue to push the reforms that have been set forward. I think that the key thing in terms of where the rubber hits the road on this isn't actually the legislation. It's the way that the regulators are now held to account on things such as the secondary objective on economic growth and competitiveness. So recently, the Secretary of State for Business and Trade, Kemi Badenoch, had an exchange of letters with the new CEO of the Financial Reporting Council, Richard Moriarty, talking about how they both wanted to hardwire competitiveness into the way the FRC works. We thought that was a critical element in terms of the Financial Services and Markets Act, that the FCA and the PRA are held to account on how they implement that secondary objective, because otherwise it's just there on paper. It will always potentially fall by the wayside when something more urgent comes up. But if you're going to deal with the sort of things we were talking about earlier, which is economic growth, which is investment in public services, increases in defence spending, et cetera, and you're not increasing taxes and you're not increasing debt, the only way you get this is growth. And we are one of the, there's just no getting away from this. Isn't me, sort of waving the flag for financial services. It's just an economic reality. Our industry's got to be a critical part of delivering that nationally and at sort of regional level as well. So the KPIs, the key performance indicators that have been put forward on that are the critical element. The government's doing some work on that at the moment. How Labour then acts when they get in, the approach they take to those, and the approach they take to the way that you incentivise risk and growth in the economy is going to be critical.
Are there any specific measures that you can see down the pipe that are going to really help that? How can the capital markets really expand in this country? How can the liquidity levels deepen? How can there be more appetite for risk? And the London Stock Exchange sort of reverse this decline it's been in terms of the size of its market.
Yeah, and look, the sort of thing here is that you've got to take a different approach on risk and how that incentivizes growth. And one of the problems that we've got at the moment is that the regulators, fair play to the regulators, we have genuinely fantastic regulators here in the UK, but they are not incentivized to do anything other than prevent things from going wrong. So if you look at, I'm probably not going to win myself any friends at the Treasury Select Committee on this one. This may be my first and last appearance on your podcast. When Nikhil Ratty or Sam Woods go to the Treasury Select Committee, typically the questions they get from the members of the Treasury Select Committee aren't, what are you doing to drive competitiveness? They aren't, what are you doing to drive growth? They are, my constituents just lost 250 quid on something. What are you going to do about it?
Consumer protection.
It's consumer protection.
It's important.
Which is hugely important. And I'm in no way denigrating that. But it is important that we strike the right balance between looking after consumers and the retail end of this and making sure that we are incentivizing and giving regulators the air cover to go in and actually drive growth. And I think Nikhil gets it, and I think the team around him get it. But that is not always the lived experience, if you like, if I can use that term, in terms of the supervisory visits and the enforcement visits that companies get from their day-to-day team.
Incentivizing, I mean, is it through ISAs? Is it UK ISAs? I know we had
the UK ISAs. This came up at your event, didn't it? This idea that most countries would give a tax break to people to invest in funds that might actually invest back into the UK.
Yeah, the Canadians are like the poster child on this. Right. So the British ISA, I think, if we end up with something like a British ISA, of which we would be hugely supportive, it could well be based on what they've done in Canada, which is exactly as you say, there's a sort of different tax wrapper on those sorts of investments. And you've got to look also at what's happened in the UK. You touched on the sort of liquidity and the depth of the capital markets. If you look at the proportion of British household assets that are in equities, it's about 11% in the UK. In the US, it's north of 40%. In France and Germany, which aren't considered great sort of shareholding democracies, it's north of 30%. The UK has fallen behind on this. It's a point we've raised consistently. And it's one of the reasons why you've got some companies looking at the UK and opening up in the UK from the point of view of there's an opportunity here, because it's at such a low base that you can sort of drive that forward. But absolutely, I think this is a potential opportunity.
So the Chancellor's making good noises about it. There's a great column out on Bloomberg by Merritt and Somerset Webb really advocating for this. But he might only have a few months left, mightn't he? So do you think that's something that you would see Rachel Reeves picking up on?
I'd hope so. And one of the things that I think we've certainly seen in this space over a number of years now is, and full credit to John Glenn, who was the City Minister who took this forward, that leaving the European Union, and I don't want to turn this into a backward-looking conversation, but leaving the European Union did mean we had to look at everything almost from sort of first principles in terms of how regulation worked, in terms of the systems that were in place, in terms of how we compared against other key markets. There were 40 different consultations that John Glenn as City Minister took through. He worked very closely and kept his counterparts on the Labour side sort of cited on this. I think that's been done by his successors as well. So there is a degree of cross-party consensus, at least on the bigger pictures here. So I would very much hope that Rachel Reeves would take that forward. We would certainly urge Labour, if they win the next general election, to take that forward. We think it's a sort of win-win scenario from a whole range of areas.
Can I talk about some of the numbers? Because Merritt kind of laid it out in her column, and that was really interesting. I mean, she says basically the ISA costs the UK taxpayer around £4 billion in tax revenue foregone. And of course, there's no obligation for the recipients to have any incentives to invest back in the UK. I guess is the concern, I mean, this is a catch-22 because you need growth for companies to get bigger in the UK. Because if you look at what's been doing really well, for example, on the FTSE, it's the oil majors.
Yeah.
And that's not a proper UK play.
It's
what comes first, like the chicken or the egg?
So it's a tricky one. This is I think the answer the Chancellor gave you, which was suitably Delphic in terms of not giving away too much of his budget plans. But this was the point that he raised. It is a complex picture. It has fiscal implications. I don't think it is a magic bullet. I think it is part of a set of solutions that we need to look at. So there's a huge amount of work that we've been doing, that the Stock Exchange have been doing, UK Finance, the banking organisation have been doing, and others on how do you revitalise capital markets. Now, in the UK, and how do you revitalise listings in the UK? Now, some of this is stuff that you can put in place and government is seeking to put in place through initiatives potentially like the British ISA. There are other things we could do. We think that looking at taxation, stamp duty would be worth exploring.
Stock trading stamp duty.
Yeah. Where the UK is
where lots of places don't have that.
Exactly. We're making our own lives harder in terms of competitive position when we look at our major peers.
Loosen listing rules. I mean, that was one of the problems with ARM or tech in general, isn't it? Around it's more beneficial for founders and startups, or they view it as more beneficial in the American regime. Should we loosen those, which a few bite do?
There have been proposals on the premium and the standard listing. The FRC's been looking at what you can do in terms of reporting requirements and streamlining all of this. But we've got to recognise this is not something, particularly for an international financial centre. We don't sort of stand here alone in splendid isolation. We have got to recognise the rest of the world is moving forward in these areas.
But what I don't understand, I mean, ARM, the Chancellor at the time, Rishi Sunak, was pitching himself for this to happen. So I guess my worry is that if he couldn't get the ARM listing, right?
I mean, the rules were stacked against him, I guess. ARM would say.
So that was part of it, but also, and I think there were sort of a variety of other factors in this, but also it's the way that government was organised. So Jerry Grimstone, who was the Minister for Investment at the time, did a lot of the heavy lifting on ARM, didn't quite manage to get it over the line, obviously. If you compare the experience of an international investor who's interested in France versus an international investor or a potential listing in the UK, very different. You can't move to in any other part of the world, practically seeing the corner shop. You'll pop in and they've got President Macron on speed dial on their mobile phone. In fact, I think it's probably easier to list any business person.
He lobbies.
He's coming in next on the podcast.
Right, exactly.
Talk about a fantastic place, Francis, to invest. Yeah. The French do this phenomenally well, and we haven't. And we have rested on our laurels for far too long. And I think there's been a consequence to that. We've been way too slow on this, and I think Brexit has acted as a little bit of a wake-up call that we can't simply keep relying on the kindness of strangers here. We need to make ourselves look a lot more attractive.
We need the red carpet like the French did, Le Tapis Rouge.
Right. Come to
that Macron said. Miles, thank you so much.
Thanks very much indeed. Thank you.
Thanks for listening to This Week's in the City. We will be back next week.
But in the meantime, if you like our show, please head on over to wherever you listen to podcasts, rate, review, and subscribe. This episode was hosted by me, Francine Lacqua.
And me, David Merritt.
It was produced by Summer Sadi.
And additional editing by Blake Maypoles.
And special thanks to Miles Celic.